Ladies and gentlemen of the crypto space, we're live on a Monday, June 3rd at 11:46 a.m. Not bad, almost on time today. So, with this cycle, this summer, and whatever you guys want to believe this cycle is, but it is here. It is June, and the data shows us the cycle is not coming to an end. It's just figuring out how it's bottoming and starting. Do you want to still think it's the Bitcoin halving cycle? Because that's already passed. We had the Bitcoin halving. Or do you want to start to maybe think it's the currency expansion cycle with the mechanics that we very much discuss? And in that regard, we have much more data, just much more than a cyclical every 4-year halving. What does that even mean? But data with regard to interest rates and available collateral and available favorable conditions for credit and how credit allows money to be converted into currency. And when inspecting these systems the way we talk, it hasn't even started yet. Isn't that the most insane thing? How the vast majority of people in these markets go around not understanding where we are. It's like going into a forest and not having a plan. Where are we? Oh, there's a whole bunch of trees. I'm missing the forest for the trees. Take a step back. Breathe. Can't just go in. You need a plan. And that is, there is nothing more important to discuss than a plan. The last thing you want to do is just buy things. That's crazy. It's just not appropriate. And then the first thing someone thinks is once they just buy things, when do I sell things? I got to get out before the top is in, make as much money as possible, and have no idea what the hell to do with the money. No sustainability to the methodology. So I've presented over the years X, Y, and Z. How much does it cost? How much is it paying? And how likely is it to continue to pay into the future? Now, I should have put numbers like this together a long time ago. Simple CAGR, compound average growth rate, standard industry terminology, and the power of growth when you are talking and thinking in terms of percentage points. Now, the hardest thing new people have to deal with is time. New investors have to deal with is time. Greed, envy. Pick any of the 50,000 deadly sins of your favorite religious group. Those are what cause you to fail. At one, capital management. Two, actually maintaining sanity. You will not succeed in managing capital unless you are comfortable, calm, and have a plan. And I actively discourage the plan being, you gotta sell before the top is in. Because that's what everyone wants to do. And everyone fails. The majority lose because they didn't read the instruction manual. The instruction manual of capital management is that the majority will always lose. Capital management is the few taking from the majority, is the more informed taking from the less informed, is the patient taking from the anxious. That's something that Warren Buffett always said. Markets are the greatest way to transfer capital from the impatient to the patient. So that was one thing I learned relatively early. And the second thing is, why not get paid while being patient? And that's just choice. Choice of what you want to invest in as a business and the structure of that business being designed to be productive. And now bear in mind, if it's not productive, is it really a business? It's not. And that's why over the years we've defined gas tokens, which Bitcoin ultimately is a gas token for engaging in, at minimum, a transaction. They are cash. So a cash is a dollar, is a euro, is a pound, is a yen, is a yuan, is a whatever, which means that you're an FX investor. Now that is a whole industry and a whole profession and skill set to be a qualified FX investor. So at least know what you're doing going into this insane cycle. Now the reason this is such an important conversation is because this cycle, it's different this time. Yeah, every schmuck thinks that they like to say that it's different this time. It's so different this time. All right, fine. I'm that schmuck for the day. I mean, it's so incredibly different this time. But that's from an interest rate perspective. So quantitatively, it is different this time. The structure of the system is completely different. It means it's a different world, which is going to manifest all the way down to your individual lives, including consumer price inflation, as well as behaviors and trends of what businesses are successful and what are failure, what will are destined to fail. So these interest rates of higher lows and higher highs, which is structurally what the system is screaming for, is going to create a very different landscape of business that you will interact with. A lot of things will become failures and a lot of new industries will be born. The whole world's going to change because of that. Which means it is different this time. Which means why not take a page out of the actual financial system and behave different this time? I sure as hell am. As you can see, my demeanor is quite extraordinarily different from years past. Years at this point, ladies and gentlemen, of the crypto space. So Bitcoin over the last 10 years had a CAGR of 88%. One, that's disgusting. So you need to appreciate Bitcoin maximalists and how biased they are. 88%. And if you dare talk about like 2010, it's disgusting because $100,000 invested in Bitcoin in over a 5-year, over a 10-year time frame with a CAGR of 40% produces $3.45 million. That's a CAGR of 40%. Now Bitcoin has a CAGR of 88% over the last 10 years. So an optimal entry in Bitcoin, they're all millionaires. Any of the early folks, and it's a relatively small group of folks. Most people try and get out before the top is in. But the few folks that had a different perspective are, they got 10, 20, 30, 50, probably 9 figures. And those are the big boys. And they're the few. So they're very biased. So you can't dwell on the past. You move forward. You play today as you see tomorrow. And what you want is time on your side. Because the number one thing that screws over all those coinfessions folks is trying to do things in a short period of time. And for the ultra minority, it works. For the love of God, don't be the ultra minority. Don't try. You're going to fail. Because they always do. So take your time and think in terms of a 8 to 12 year time frame. Now that's perfect for a 20-year-old. And it's acceptable for a 30-year-old. You got plenty of time. Time on your side. The CAGR that you're going to get in these crypto markets is nothing like anything that's offered in traditional finance, because the TAM, the total addressable market of these crypto assets, is global. And the business, the industry of these protocols is nothing compared to any industry available on the New York Stock Exchange or NASDAQ. You can't own these businesses. These businesses don't exist. So that's crazy. So that's why these CAGRs manifest. I think these numbers are going to be towards the low end. What will play out is just, I don't see why it's not going to be weird. And that's a term I've been using for quite some time now. Weird. Credit is the oldest business on the planet, other than prostitution. I don't know if, I want to be in the oldest business in the world, but I'm not going to go to the old one. I'm not going to do that one. But I'll do the credit. Credit makes sense. It's the business of banking. It's the business of the mafia, loan sharking. It's the business. It's the oldest business. It's what creates growth, allowing someone to do what they couldn't do because they didn't have access to capital. So that's why I see this as just the start of a very weird growth rate in an industry that you cannot buy into on NASDAQ or the New York Stock Exchange. So at a 40% CAGR, $100,000 invested at 20 years old is worth $3.45 million at 30. And there's a plus. And you can take $600,000 salary for the year. And then at 31, you could take a $672,000 salary, compensating 12% for the currency expansion of the planet. And by the time it's 35, you could take $1 million salary, which in theory should accommodate consumer price inflation, and you're keeping up with the growth rate of global currency. And for these calculations, it was taken at a 12% rate of growth. So bear in mind, the portfolio balance goes exponential. Between 30 and 35, you're at 9.8 mil. But the 9.8 mil allows you to pull the 1,056,000, which is compensating for currency expansion at 12% per year. So the 1,056,000 is the same purchasing power as the $600,000 salary that you took at age 30. All of this is $100,000 invested at 20 years old at a 40% CAGR. Now, 40% CAGR, now that's a large number. Now that's like the pros. It's like a Druckenmiller. But this is the crypto space. And I think this is quite a reasonable number for the crypto space. The pros are not invested in these markets the way adolescents are, or the way someone such as myself who understands these markets the way we discuss, is exposed. This is my ownership. This is basically a similar path. So not overwhelmingly similar numbers, but I was here in 2019, about 110, and I see these numbers are as actually low for what I expect, and that might be surreal to a lot of people. But what I see playing out, I think, is best thought of in terms of weird with regard to the top. Weird with regard to the top is, like a mil to 100 mil, 100x on the portfolio. And then the 100 mil collapses to like 10, 15, 20 mil. Isn't that weird? So 100 grand turns into 10 mil, collapses to a mil and a half. That seems like weird stuff. So maybe these portfolio balances are at the troughs of the cycle. The bear market low, where everyone thinks the world is ending. So if you psychologically program yourself to be like, not really interested in the 7 deadly sins, greed. I need to sell before the top is in. to make $100 million to fly around the world in private jets and stupid shit. And maybe dare I encourage humbleness, where you can pay all your bills from your backyard while you're sitting at the pool, sipping on a margarita at 2 in the afternoon by clicking a claim button. So, you know, what am I trying to think of? I'm like, oh, how dare I? How dare I try and look at the crypto markets and be humble, looking at these numbers as these are the humble numbers. And then you got the folks that are greedy that are like they want more and more and more and it's never enough and don't even know where limits are. And maybe this entire stream today is about what the crypto markets could do for a humble person. And I'm not saying that $3.5 million is humble. That most people won't make that in a lifetime of work. But what I am saying is that these particular numbers are very much towards the low end if you avoid the greed. Isn't that crazy? Well, that's weird. And that's the word I will continue to use. It's going to get so goddamn weird. 100X's on the portfolio. It crashes 80, 90%. And you turned, 100 grand into a mil and a half. After seeing, all right, fine, I understand. You see a 10 mil at the top. But think of the emotions and think of the behavior that's necessary and the work. I am here not to do work. I am here to play smarter and not work harder. So to play the smartest, I need to override my instincts, override the basic fundamental programming of the human computer that says more, that says eat more. And you get this fat people in the U.S. I need more money, greedy, more. No, I'm here to be free. And free doesn't require more. Hope that helps. Pull up the Bitcoin chart as we're pushing back into 70,000. There was 74,000. It crashed to 57,000. And everyone got shaken out of their bag. What a shame. Yeah, well, yeah, tape pusher. I'm a damn Bitcoin maximalist, everyone. I've said that a couple of times on social media, but I didn't speak it out loud. If you're going to have cash, I mean, stable coins are not very useful as a cash other than for settlement. But from a cash position, you also want collateral. So what can serve as both collateral and cash useful for settlement? Settlement means you could convert it into something that a retail store allows you to make payment with. So Bitcoin can be converted to stable coins and you can pay on a debit card at the supermarket. Great. You do that with stable coins, you can do that with Bitcoin. But Bitcoin, you could borrow against. Because of my choice to have a certain amount of cash in Bitcoin denomination, I was able to purchase exposure to Velodrome. And I didn't spend any of my cash position. I had a debt position, and the income from my businesses have paid off that debt. I'll give you guys some numbers. I took about $27,000 worth of debt to buy these couple of Velodrome positions. It's about 350,000 Velo. So I'm compounding it using a relay at 42.94%. Oh shit, there's that 40%. So 40%, oh, that's 40%. That's a nice number. So I borrowed 27 grand on CRVUSD. I paid back about 24,700 over it already. I got it. So once Wednesday comes along and it's payday, I'll pay this off. I'll take my Bitcoin back. I don't need to borrow against it. because I am required to exercise strict prudent judgment as my own fiduciary, and I can only invest, one, where adequate capital is available, two, when a position size is appropriate, and three, when it's an actual reasonable investment, according to my assessment, professional assessment. So in that regard, my collateral will come back to me. I don't need the debt for anything. And at this point in the cycle, optimally, I would say you're struggling to find investments. Optimally, you already have exposure to everything you need. Now, if you're late and you're joining me for the first time and you've never heard my voice before, hi, I'm Noah. I'm the captain. We've been doing this for a long time. It's going on 5 years. And I don't have an easy story to tell you on how to get into this market now, because it's late. Early was, Q3, Q4, 2022, and you'll have your opportunity again to buy the discounts probably in Q4 2025, Q1, Q2 2026. So zoom TF out and start thinking in multi-year time frames. And that's a very hard pill to swallow for someone new to the space. Okay, so tape pushing, Bitcoin maximalist. I mean, what am I going to hold? Ethereum's great too. Notice I'm obviously holding it in WBTC format, which has its shortcomings compared to actual Bitcoin. I think about that. I think Bitcoin's quite extraordinary for the reasons maximalists espouse, but I also am pretty comfortable stating that they don't understand the way financial systems work. A common thing that critics or financial critics state is that the dollar has lost 99.9% of its value since 1913. Do you know that if people retain their purchasing power, the dollar didn't lose that value, and everyone could still buy the same amount of goods and services with their currency? Do you know what kind of distortion that places on uh, supply and demand? Demand doesn't diminish. People constantly can buy the same amount of goods. So the demand doesn't keep up. Consumer price inflation goes absolutely ballistic. If the dollar didn't lose the amount of value it did since 1913, a gallon of milk would be $1,000, $1,500, $2,000. You would have never had a capacity to balance supply and demand. See, the short-sightedness of a lot of folks is they don't understand the mechanics. And you can be angry at the system, that's okay. But we are here to understand the mechanics of how the system works so that we can be calm and navigate rather than be frantic and flop around like fish out of water. Just be calm. And you'll see some things that most people don't see because the vast majority are not calm. With regard to cash, I mean, it's remarkable what Bitcoin serves as in a cash position, especially actual Bitcoin, even more so than WBTC. It's collateralizable, and if it's not WBTC, it's everything that they talk about. That's crazy, and I firmly am in that camp. Except I understand that Bitcoin is not an investment. An investment is a business that provides a product and a service. So Bitcoin is a cash. It has collateral properties and properties of moneyness. Or it's the moneyness that gives it its capacity to be used as collateral. Because money prints currency. Oh, you can be so angry at the system, the dollar. They print so many dollars. I printed dollars. What do you think you're looking at? This is the same dollar printing that the Fed does. This is the same dollar printing that Treasury does, more or less. And this is the same dollar printing that creates the global currency cycle that we're talking about. This right here, I contributed to it. I created dollar currency units. And yes, CRVUSD is a dollar currency unit, no different than a euro dollar type product at the highest of levels. I printed money. Accept it and understand it, because that's what it is. Credit is the money printing mechanism. And those are the businesses that I want to own. Hope that helps. Raul, hello. Connect the dots. Good morning. I am DC. Good morning. Tap C. What's up, y'all? Gazika. Anna said, yeah. Can you look over the correlation between DeFi TVL and curve fees? TVL is irrelevant. What's pertinent is volume. Volume uh, spews opportunity. You can smell it in the air when the volume is high. So when the volume is high, people want to take risk, and they want to seek out opportunity. So the high volume combined with low volatility and collateral is like Tinder. That's primed. When that's kind of where we're getting to. If you look at the move indicator, the top is in. So we need further confirmation that a bottom doesn't print at a relatively high volatility. This is a global collateral, folks. I used Bitcoin to print my dollars. The world uses U.S. long-duration debt, treasuries, to print their dollars. This is the core of the system and how dollars are printed around the world at the core. So, on the monthly close, let's go to the 3-month inverted hammer. This is nothing to sneeze about, albeit we finally pushed through the 3-month time-weighted average price. So we're a quarter or two heading into Q4. October should get interesting, where hopefully we see a rejection of the time-weighted average price to the downside, which means regulators, financial regulators worldwide, have finally gained control over volatility in the deepest, most liquid market in the world, as Yellen talks about. And that's what facilitates the currency expansion cycle, because this is the money that prints the currency. All you need, aside from low volatility in the collateral space, is the business, is the spark of volatility. Once the spark of volatility occurs to the upside, if you have collateral sitting around, you can borrow cash to long the upside and to buy things and to start businesses. And that's a big process. It'll play out for a solid year plus. And that's where we're at. That's where we're heading. You see this push below the 50 SMA in the 3-month? It's going to get weird. And you're going to want to not be frantic. You're going to want to be calm. That's why I've offered the XYZ over the years. Be calm. Think different. Also, what happens to the dollar if U.S. Oh, there you go. What happens to the dollar if U.S. debt is no longer the world reserve collateral? Okay, no longer as in someone chose. That's not the way the system works. I could choose never to use dollars again. I walk into a supermarket. I can't buy anything. Choice is irrelevant. The seller makes the choices for the buyer. And it's all about what you're willing to accept for settlement. One, that's where the petrodollar system is, and still is, and it's changing at the margins. Check back in 10, 20 years. CNY is accepted for, there's oil settlement, but it's marginal. Change does start at the margins. World reserve collateral. Well, gold is quickly changing things at the margins, but it's the core that matters for this year, next year, the year after, 5 years. Check back in 10 years. There's no such. So if you're really So that's the like one of the most important things for new people to digest. Oh, the BRICS countries, they're not going to use the dollar anymore. No longer going to be the world reserve currency, the world reserve collateral. No sense of time horizon, young man. Check back in 10, 20 years. Because for every dollar that exists on the planet, 99.9% of them, they exist because there's an interest rate. Someone's paying interest to create that dollar, just like I paid interest to create my dollars. So all that collateral that you're saying, um, someone owes someone money. And when someone owes someone money, let's say I lent someone $1 billion, and that schmuck comes back at me and says, I want to give you 1,000,000 ounces of gold. Do you know how much of a pain in the ass gold is to transport? Or gold certificates, and how do I validate that I'm actually getting paid back? So, or yen, or yuan, or euros, or pounds. No, motherfucker, pay me back my dollars. I lent you money. Pay me my money. So, the next time you think about, or think to yourself, no longer the world reserve currency, no longer the world reserve collateral, remind yourself that everyone will get very pissy if they don't get paid back what they lent someone. The world of economics has a way of entrenching itself and carrying momentum. Everyone is going to demand payment in the currency that they lent it in. Maybe it's gold, maybe it's crypto. Does it matter? I think both indicate a different world. We've already seen that we're entering a different world with interest rates. We've already seen we're entering a different world where clearly for the last 50 years, China doesn't want to use the dollar. Russia doesn't want to use the dollar. That's been going on for decades. And yet, as of this year, the dollar is used more so than ever in the last decades for settlement. Right now, the dollar is the most popular currency on the planet for settling transactions. And it is up big. Let's see if we can find it real quick. He replied, I think. Where was it? Where was it? Yeah, here. A big spike in dollar use. So dollar is used for 48% of global transactions. Euro fell right through the roof from 38% down to the lower 20s, 23%. Everything else is marginal. Yen, look at CNY at 3.47% of transactions. So we're talking about, oh, China's buying gold. CNY is used for 3.5% of transactions, and the dollar is used for 48%. Now, Luke points out in his response that this was only the SWIFT system. So it's up, and it's up big. It's changing. The world is changing, and that's fine to see. It's 48%. Even if you account for this, the SIP system, the dollar is still what it is for the coming years. So do not bet today for what's going to be in 10 years, 15 years. There's little difference between being early and being wrong. Now, the further early you are, the more wrong you are. So that is not a bet that's on the table right now. Now, bear in mind, that's also like out of the money options, like insanely out of the money options. Okay, so that's why, as Tape Pusher mentioned, I'm a Bitcoin maximalist. You got to have exposure. You got to have exposure to it for reasons like that. But you're not going to make your money on that. You can make your money on some shit that pops off in the next 6 months, in the next year. So just remember that. That interesting point, and I've obviously been talking about it for quite some time at this point. Yeah. That's it for now. Got to go. Catch the recording. You have a good one. Much a pleasure. I hope that answer helps. DeFi Club. If you had to make an index of DeFi tokens, which 5 assets would you choose? I don't do indexes. I want to own things that I have exposure to things that I want to in size that I want to. I think I have literally zero interest in an index. Um, I don't see the purpose for it other than facilitating uh, persons to engage and invest that probably shouldn't be. Albeit, is that a bad thing from a societal perspective? Because then, the manager of the index is actually doing good for the investor that has no qualification to invest. So it's not necessarily a bad thing. Um, so it's like a social program of sorts where some sort of product is offered that helps a person do something that they typically couldn't do. So it's a little biased that I respond to you that I have zero interest in indexes. Um, but I see it's a social good. Hope that helps. I wouldn't make a basket. I wouldn't. I don't do. I would. I just. How do you manage the revenue? I don't give a shit about the asset. I care about the revenue. In fact, my entire portfolio has zero fair market value. I ascribe or assign $0 fair market value in my books for these positions that I have, for these businesses that I own. My curve positions worth zero. RAM worth zero. Velodrome worth zero. Nile worth zero. They're worth zero. If you cannot sell them, they are worthless. So I look at my portfolio and whatever you want to look at, I barely have anything. It's the cash position. That's all that matters. If I have literally like 60, 70, 80 grand in the cash position. That's it. Everything else is $0 fair market value because it's irrelevant. Now, what's pertinent is that cash position has been used for investment purposes. It's used to pay for things that I need on a daily basis for myself and my family. Excuse me. And we're done with investing season. So instead of spending and reinvesting capital, that cash position is about to balloon heading into the end of 2025, much like Warren Buffett is sitting on a record pile of cash. So clearly, I'm not going to accumulate nearly that amount of capital, but it's going to be probably a couple $100,000 and probably even more as things get weird. And that is why I just need to be in control of these types of investments and not basket them into index funds. It's critical to have very methodical accounting. Did I talk about that on stream yet? We really need to get into accounting more. Accounting is possibly just as important, if not more important, than actually investing. Alessandro, still some good deals. Curves at a good discount. Yeah, sure it is. 46 cents. Even at this point, for someone new, would you not agree? Yes, I certainly would agree. The problem is, man, that's going to be a steep learning curve because you're going to have some newbie get into curve and they're going to see some shitcoin go 10,000x on the money, and then in Q1 2025, curve's going to be at $3, and they're going to be like, I'm underperforming. Meanwhile, I'm here now telling you if curve is $3 in January of 2025, I'm like, holy shit. That's insane. That's an incredible number. It's a remarkable number. Now, bear in mind, if it's $3 cranking out 250% APRs in vote market, it's probably not $3. So we'll know in hindsight. We're going to have a fun story to talk about, Q4 2025, when all is said and done. Because the price of curve isn't dictated by curve. The price of curve is dictated by the demand for its products and services. So if its products and services say that CRV USD is cranking out 75% APR for VCRV owners, the price of curve isn't going to be, it's going to go up. And the yield will come down because yield is inversely proportional to the price point of the asset, at least the fair market value price. It remains inversely proportional, or no, I don't know, because I measure the productive capacity of the portfolio based on basis entry price, for what it's worth. Potato, UWU. What is a UWU? What is a potato? DeFi Club. And the vote power, you could control the future of that business and use them as liquidity as a service. Sure. And I think a lot more assets are going to be collateralizable into the future. Why not? And the businesses I want to own allow the printing of currency using whatever kind of asset. And what gives me great excitement is the design of these businesses and how they're designed to protect themselves with regard to collateralization in their balance sheet. There's no HTM in these markets, boys and girls. There's no hold to maturity. There's mark to market in real time. That's crazy. That changes everything from a credit business perspective. All right, let's keep it short and sweet today. Ladies and gentlemen, it was a nice one, going on about an hour. No, maybe a little less. Anyway, I should maybe make these things shorter anyway. I wish you all a good one. I think I'll be on with Ben tomorrow, but otherwise I'll be back on Wednesday. You know the deal. Stay rational out there. Stop driving yourself nuts. Let the market do the work. Stop doing the work. And we'll check back. Y'all have a good one. Tell everyone to subscribe. I'll see you later this week. Peace.